What is up, everybody? Today is January 6th, Monday, and I took two trades. One of them was a win, one of them is a loss, and I ended up being break even today. Actually, I took the loss first, then the win. But let's take a look at what I was eyeing for today. So overnight, yeah, we had some crazy movement. As you can see, here was the open for the Sunday open for the week, and we just rallied on up into this 4-hour fair value gap. Now, if you guys have seen my videos, I was saying how I was expecting price to come up into this area, into this draw on liquidity right there. And then the reaction there is going to be very important, I said, to see whether we're going to then break on down, which is ideally what I want. I want us to break on down from here and then target this low right there, especially the low that we have right there. So at relative equal lows. And if at that point we are targeting this here, then we're going to go to 679.75 and potentially 305.50. So my idea was to continue going on higher and then hitting another liquidity level that we have here at 885.25, and then 955.50 would be the next one after that if it wanted to keep on going more than that. So I came in with a bullish bias this morning. I was expecting us to continue moving on up into this area. Before the open, the draw was hit, I believe. Let's take a look at the hourly here. I know I have a lot of stuff marked out. I marked out a bunch of fair value gaps. Honestly, we don't even need to have that one there. We don't even need this one here or this one, just to clean it up a bit. And I'll turn off the macros for now just to make it cleaner for you guys. So we are in that higher time frame fair value gap right there. I'll take that off for now. But as you can see, price came up into that draw on liquidity around 6 to 7 o'clock in the morning Eastern time. So it was a very strange spot to be in. I know a lot of people want to short when price is moving on up so aggressively like that, but you need to wait for confirmation to short. If you keep trying to time the top, you're going to get killed in the market with your portfolio, because it doesn't work. It doesn't work trying to time the top every single time. You know, it's going to keep on going higher. If the market wants to keep going higher, it's going to go higher. So overall, I marked out just areas of confluence where we could bounce out of. So that was my thinking, where we could find some level of support to then bounce and then continue moving on higher, because as of right now, we are still bullish on the 4-hour, the 1-hour, and the 15-minute chart. We were also bullish, right? So here's the market open, before 9:30, right? We dip down into these levels, we sweep that low right there, and then start to rally on higher. I had marked out I didn't mark it, but I saw a 15-minute fair value gap. I also saw a 5-minute fair value gap formed right there. So overall, I was just waiting for some kind of a pullback to then take that up into that 885.25 level. The level that I had marked out there was just a top of a 1-hour fair value gap. I had a feeling that we were going to end up filling that and then dropping back on down. And obviously that's what we got. So looking at the macros, right? Look at the macro time frames to see if any setups formed during those times. Let's turn that indicator back on. So I don't trade this one. I usually trade the 950 to 1010. Now here I didn't take that trade, or any trade, because as you can see, we're consolidating and we did not retrace far back enough into an area where I felt confident that we were going to bounce out of. So that one was out of the question. Here we were also just hanging around in this area, consolidating once again. And then we come in for the lunchtime macro. So I saw, let me double check. Actually, let me sign into my account. Okay, so now that I'm signed into my account, I was taking a look at this to see what this macro wanted to do. The one thing that I noted was that we opened up for the hourly right there. We had a drop down, a drop back on up, creating a failure swing high, and then inversing this fair value gap right there. That was a trade that I wanted to take, but I hesitated because of the fact that I don't trade a retracement on a higher time frame unless I get some really solid confirmation. And for me and my risk, this was too early. Although the trade did play out, it was too early. I ideally wanted a push down into this 5-minute fair value gap first before going and taking a long trade. I know some people took longs right here, even on that one there, and even that inverse right there. But what you need to take into account is that price needs to drop into some kind of a fair value gap before you take any kind of trade like that. It has to go into some kind of FEG. And on this way up here, there's nothing on the 15-minute time frame, which is probably the biggest one that I look at to find those quick 15-minute bounces off of a latest fair value gap, like here. Like sometimes price comes in, as you can see it did, comes in, taps it, and then goes higher. Those are the times where I like to see that kind of in action. And what I was looking for was this 5-minute right there. I wanted price to tap into it. Unfortunately, during the macro, we did not tap into that, and that's why longs were not the move. So if you took those longs there, well, there's your reason why you should not have taken that. So I waited for the next macro at 110, and here at this point in time, we were in that 15-minute fair value gap. We had swept these two levels of liquidity. We were holding a 5-minute fair value gap, and I had a lot of thought to go long. So I waited for the invalidation of this 1-minute bearish fair value gap right here. I market ordered in. I put my stop below the swing low, saw a little bit of profit, but did fail to come through that. And unfortunately, as you can see, we have a 1-minute fair value gap that gets created there, and we trade through that. Now, here's where I went wrong. I held on to the trade, both because I was hoping that it was going to go higher, and second, because I walked away. I had confidence that it was going to go higher. Now, what I failed to see, okay, what did I fail to see here? I got to remember how the 4-hour candle is being created. So here we have, it's around 1 o'clock. We're starting to create the move by then. So you see that the candle opens up, accumulates, and then manipulates higher into that level of liquidity, right? It comes in and fills that fair value gap. Then look at how price reacts near the open of that 4-hour candle. We get a bounce and then strong displacement through, very strong energetic move through. This was a huge clue to me that we should have gone short. We should have been looking for shorts at that point. So what I could have done was, yeah, maybe I still took the long, and I did consider switching to short when I saw it on my phone. But I've told myself that I don't trade on my phone either. It was my bad for walking away. This is also why I don't trade PM session, because I'm usually busy. But hey, it's all right. We live and we learn, right? So as you can see, the move would have been closing out my long here, entering short like I did. I had marked this out right here, putting my stop above that high, and then targeting at least targeting down here, although it did not hit that. You know, at least some kind of a 1 to 3. As you can see, it came up to a 1 to 4.6 is what I was targeting, and I believe it even hit a 1 to 4. But regardless, this would have been the best move. I would have cut this loss early. It wouldn't have been the entire loss. So I let the whole loss go through. I was a little bummed out, and I just decided, you know what, I'm gonna wait. And I kept seeing so many other setups that I wanted to jump in so bad. And like here, I wanted to short this so bad. As you can see, I even marked it out. And I told myself, stop, be patient, because you never know what's going to happen. It's probably going to end up retracing back up and stop you out. And I'm glad that I listened to myself, because, you know, as you can see, we did. And so at this point now, I was bearish. We invalidated this 15-minute fair value gap, this 5-minute, this 5-minute, and this blue 1-hour fair value gap. We invalidated all of that. So I was bearish at that point. I wanted to find some kind of a bearish setup within the macro here for the New York last hour. It also lined up with quarterly theory, where we had accumulation, a manipulation move on up. So I was looking for a move down. And now at this point in the day, I was just looking to just get back to break even. And as you can see, I market ordered in right when that candle closed. I waited a little bit and I got a better of a fill rather than, you know, right there. Put my stop above the swing high, and I took my profit off at a 21,697. So 21,697 is a 1 to 4.3 risk to reward. So here I lost 1R. Now the problem that I did was that I risked $100 more here than here, and that's why this ended up being break even. If I had risked the same amount, I would have came out at least half R, you know, at least. But regardless, the trade itself hit a 1 to 2. Would have been nice if I had held that to a 1 to 2, but I didn't want to be greedy. I decided, you know what, I messed up today already. I'm just gonna take my gain. It is what it is. And yeah, so this trade, solid. It fit my plan. You know, it came down and swept these lows right here, and then it found support once again in this 1 minute bullish fair value gap, and then skyrocketed after. So overall, good patience today. I didn't take anything that I was uncertain of here in the AM session. I waited for confirmation. Here I missed this. I don't usually play the PM session, but I usually do look at how candles reacting to the 10 o'clock open, seeing how that 4-hour candle is developing. It's important because there is going to be the move. You're going to see it. It's going to be obvious if you look to see, okay, how was the lower wick created or the upper wick? How did price react below the 10 o'clock open? How did it react above the 10 o'clock open? Because we're playing that candle pretty much. A lot of the macros that we take, this New York 2, New York 3, New York lunch, and the New York PM, those 4 macros are all within one 4-hour candle. So it's important to see how that's reacting there. And so then once I had that short confirmation, I took it here. It took a good retracement scalp there. Not bad. But overall, let's see what the market's going to do, right? Our game plan is that it is going to come on up into this level. I think we could retrace down and hit into this level. That's what I want it to do. I want it to come down lower. But in order to get that kind of confirmation, we're still holding a very small 4-hour fair value gap there. But I really want to see a 4-hour closure below this level right here, which is 554. If we get a 4-hour close below that, then I think we have good reason to target lower. The only other fair value gap that we have in the way is this one right here. But then apart from that, it's pretty much free waters all the way down to this level. So like I said, the reaction here is important. We'll see what happens. We'll see how London develops overnight. And yeah, we'll play it whatever the chart show us tomorrow morning. All right, guys, I hope you guys ended up green. Not a bad day today. Some good setups. You just needed to be patient. And we will see each other tomorrow. Peace.